Hey everybody, this is Ryan Mallory with Swing Trading's finest website, SharePlanner.com, and I'm going to do an analysis on Facebook, Amazon, Netflix, Google, and Apple. So basically your FANG stocks plus Apple. Or as a lot of people say, FANG stocks because you got two A's in there. So let's do Facebook right away here, jump right into it. I actually like this stock. Obviously you had the huge pullback in the middle of March to the 150 level because of the Cambridge Analytica scandal. But since then, it's been on just this huge rally and tear. The Zuckerberg testimony before Congress definitely helped matters out a lot. But right now, you have a bull flag pattern, and it's pretty promising. I think it's a pretty good 3-day pullback. It's giving up a little bit of price action there, but it's on light volume, and it gives you a better opportunity to get in at a better price. I would say if you're looking for more of a conservative entry into the stock, I would wait for it to get down to 177, 178. I don't know if it's actually going to get there, but if it does, that would be a good bounce level as well. But right now, the way I see it, I think this is a 3 or 4 day pullback. It's on light volume. I think anything above this 177, 178 area is going to be a ideal entry spot for Facebook. Let's take a look at Amazon, and I'm going to be honest, I'm not really crazy about this stock right now. I know it's been one of the more hyped stocks of the last year or two, and for good reason. I mean, it's doing a great job. It's transcending many sectors and industries, but what you have, though, is you have a stock that is really showing some lethargic trading tendencies here. It's just really not going anywhere. It's not getting hammered really bad on the down days, and it's really not rallying hard on the good days. So you could say that this is some resistance here, and you got a triangle here that is forming. But in all seriousness, I would probably just stay away from this stock. I don't see a lot of opportunity. Maybe it goes up to 1650 in the near term. But I could also see this thing going back down in the 1400s if things got ugly in the market again. So I don't really see a risk-reward scenario here that makes Amazon worth playing. Now, Apple, I think this thing's going to hit $1 trillion in market cap sooner rather than later. Right now, it's at $927 billion. So it's not going to take but more of like a 7 or 8% move for it to get there. It's holding the 10-day moving average, similar to the Facebook pullback the last 3 days. It's bouncing today off of the 10-day moving average. The pullback was on light volume, so that was good, but you're not really seeing a lot of volume coming in on today's rally either. So a lot of that's indicative of the current market conditions, and once the summertime rolls around, low volume does tend to filter into the market. But if I had to choose between Apple and Amazon, I would choose Apple at this point. You have a decent support level that it is bouncing off of. So as long as it holds this support level, I think it's a good buying opportunity. Otherwise, I'd probably wait for it to get back down into the 170s again. Netflix, this has been a hard stock for me to trade too, and it's got a similar chart to what we see in Amazon. I mean, it was just a couple of years ago, this thing was trading down in the 90s. I mean, remember this back 2016? Yeah. It was in the 90s, and it's not there anymore. It's had earnings after earnings of blowout numbers, and it continues to pop really big after pretty much every earnings report that it has. And I still think this is tradable. I mean, you have a rising trend line right here. It's toying with it. Toyed with it yesterday. It's trying to bounce a little bit today, but this is another one. You just kind of have to catch it at the right time. I mean, you get these big moves like what you had back on May 4th. They're not as prevalent as they used to be, but if you can catch them, that's great. But I would try to play it off of this trend line like what we're seeing right now. Maybe it has another 3 or 4% upside that you can capture, and you can put a stop loss below yesterday's lows or below this trend line. That would be fine too. And then finally, Google. I told you this was going to be quick. I mean, I can fly through these charts pretty fast. I'm pretty familiar with them. I look at them every day, and I could draw them out on a napkin at a cocktail party if I had to. Google, this has been one of the odder of the stocks because it's not as bullish as what we've seen with Apple, Amazon, Netflix, and even Facebook, really. I mean, since the March lows, Facebook has rallied just like Google has, but it hasn't rallied to the same extent that Facebook has. So this stock, I mean, if you just look at it, going all the way back to really like November of last year. So what are we talking about? 5, 6, 7 months? this thing hasn't gone anywhere. I mean, I thought maybe we were having a topping pattern in the end of March, but that kind of nullified that with this double bottom like pattern, and it has since held it, and it's trying to go higher. Now, one area that you need to watch out for is declining resistance, because you do have some at the 1140 area, 1143. So that's one thing to keep an eye on, but you can probably play this as a pullback to the support level from the double bottom breakout, but even now it's trading a little bit below it, so you'll probably want to give it a little bit of time to recapture that breakout level and for it to show signs it wants to rally again. That's going to be it for today. Hope you enjoyed it. Be sure to like and subscribe. That definitely helps the YouTube channel out and definitely helps me to be able to make more videos like this. Thank you and take care. Thanks for watching. I hope you enjoyed the video. Please be sure to like and subscribe to my channel, as well as check out some of these other cool videos that I've done. And if you want to swing trade with me each and every day, you can do so by going to www.shareplanner.com/splashzone. Thanks and happy trading.